The markets have finally reversed last week after going down for a few weeks before. But still, we are at a level where above which if Nifty breaks out, we are going to see some amazing rally in the Nifty and all the large caps and mid caps as well. But also, a very interesting sector has given a nice breakout this week, which is steel. Along with this, there are also a few stocks which have broken out probably from a 15-year long consolidation or 10-year long consolidation. We're going to look at 2 to 3 stocks which have broken out after a long time and which are looking very good. Hello and welcome to the Trend Invest channel. This is your Trend investor whose objective is to primarily teach you how to use technical analysis for trading and investing. So if you're new to my channel, do watch this video till the end and then you can decide if you want to subscribe to my channel. If you're already following me, do share this video with your family and friends. So let's get started. First, we're going to discuss how to pick stocks for investing with just a few percentage of stop loss, somewhere around 10 to 15%. And as always, this is an educational video and I'm trying to help you understand how to use technical analysis for investing and trading. So let's get started first with the steel sector. Now, the steel sector itself, or the metal index, has been consolidating for the last couple of years. Since May 2021, the index has been going sideways. We have not made much returns on the steel sector or steel stocks for quite some time now. Now, this is the ratio chart of metal index to CNX 500. Now, in case you don't know what ratio charts are, there's a video on my channel. You can check it out. I've explained it very clearly how to use it and how you can find the next outperforming sector. Now, using that video, once you watch that, you can come back to this chart. And here, if you see, this is the ratio chart of steel. And here we had a breakout somewhere in 2021, June, July. Since then, we had a massive rally and then we have been consolidating fully, right? So we have been going completely sideways. And now we have retested this trend line support. Now, a primary trend line support connects the lowest points, swing lows of the lowest points. And if you drag it, the stock ratio chart is reversing here finally after almost 2 years, right? Now, that's a very, very good sign, because if the ratio chart is moving up, which means the sector is giving more returns compared to Nifty, right? So since the last 2 years, metal sector has not given much returns than Nifty, but now probably it's going to start giving you much higher returns. And also we are seeing a trendline breakout over here and a very bullish weekly candle. And also the metal index also has broken out this week. Now, some stocks which are really looking good are Tata Steel, JSW Steel and SAIL. I've covered already a couple of them in my videos in the past, and I've done a thread on Twitter just on Saturday. So you can go and check it out. The description of the Twitter thread will be in the description. Okay, so that's a short view on the steel sector and a few good looking stocks. Now let's move on. We have 4 stocks for today, basically from investing perspective, which are looking good after a long time. First is UnoMinda. UnoMinda is a fantastic company from the auto space. Now, this is a large cap company around 35,000 crores. It's pretty good. Don't think it's a large cap company. It will not move. I'll tell you the reasons why it will probably move going forward. The PE is around 50.8. ROC is around 20%. ROA is 70%. The sales growth has been excellent. Now, this is why I think this stock will probably head higher. The sales growth for the last 3 years has been 22%. Also, the profit growth has been 57% CAGR, which means this stock has been growing its profits and sales very well in the last 3 years. Also, look at the 10-year growth. It has been also very good. So overall, a company which is focused on growing its sales and profits with a very steady CAGR percentage, right? So here, if you look at 2012 to 2023, the sales has grown by 10 times, right? Also, the profits have grown like multifold, right? 28 crores to almost 700 crores. Now, the point to note here is this is done also with the very stable margins. The margins have not gone down despite COVID. The company has been doing very well. So overall, fundamentally a very good company to stay invested, especially if you're a conservative investor, or if you're looking for a SIP candidate, this is probably a very good SIP candidate as well. So let's move on to the technicals. First, I'm looking at the monthly chart as always. So this is a beautiful long-term channel. So since 2013-14, we had a massive rally. The stock went up from 4 rupees to almost 200 rupees. And then we had a massive consolidation for almost 4 years, 5 years. And then we had a breakout. Again, the stock went up from 200 levels to almost 600 levels. But this stock is not done yet. There is a lot of potential for this stock to still go ahead and head higher. Basically, this stock has been consolidating for the last couple of years. After retesting the channel middle, the stock has been going sideways. And now we have retested the channel support again. And last month, the volumes have been very good. And I think this stock can head higher from here. Now, zooming on to this chart over here, this is the daily chart, and if you see, we had a nice uptrend, and then we have been consolidating for a long time. Since May, we have been going sideways. Also, we had a short breakout, and then we are retesting that zone again. So this retest of this support zone is a very critical point here, right? Because I don't expect the stock to come below this. This retest, I think, should be over, and then we should probably head higher. Also, the volumes have been very good. The last few weeks, the volumes have been excellent, and I think this stock can head higher. You can also take this as a swing trade. You can enter the stock above this point, keep a stop loss here and enter. But I am covering the stock from a pure positional or investing perspective. So you can enter the stock currently at 610, stop loss of just 8.2%, which is 560. So 560 is around that levels over there. The stop loss is around that level. And we're going to look for targets of around 1000, which is 64%. Now, from a pure investing perspective, you can expect much higher targets. Go on to the weekly charts and try to trail your stop loss so that you get much higher returns. Okay, so that's the first stock today, which is UnoMinda. The second stock is from the banking space, which is JM Financial. Now, this stock has not done anything for the last 6-7 years. Since 2017, I think the stock has not given any returns, and I think the stock is not that bad that it will keep going down forever. Now, you can buy always a good company at a very bad price, and you can always buy a bad company at a good price. Now, I'm following the second logic where you want to buy a bad company at a good price. So this, if you think it's a bad company, it's a bad company. But from my perspective, it's a decent company because it has grown its sales decent. It has been growing, and also the profits have been decent. A profitable company, not very bad company. A mid-cap company, 8,200 crores. PE of 14.5, ROC of 9.42. Right, sales growth and PAT growth have not been very good. Let me make that statement clear. That's why I said it's not a very good company. It's an okay company. Decent, stable growth almost, right? Almost stagnant growth here. So moving on to the fundamental technical charts here. Now this is the monthly chart, and as I said, from 2017, the stock has not done well. But remember, on the monthly charts, this is still in an uptrend. We have not broken this previous swing low on the monthly charts, right? We've gone up, kind of retested the zone, retested, again retested, and now we are making a higher high. Now, a higher high is the sign of an uptrend, and if we kind of head higher, we are going to see good returns over here, and this is a major support zone. Now, I don't expect the stock to go below this major support zone anytime soon because this is a monthly chart, and we're looking at almost 6-7 years of support area, and this can be a very good candidate to bet on currently because the stock is making a higher high for the first time. Now, zooming on to the weekly charts or daily charts over here. On the daily charts, we had a breakout for the first time over here. The stock had a good breakout here with good volumes, and then the stock was consolidating for some time, but then we had a move up, down, and now finally we have broken above that resistance zone over there. Right, a good weekly candle this week, almost up 10% this week itself, but I think the stock has a lot of potential to head higher. Remember, the monthly chart, it is just starting, so we can head to much higher levels in this stock. So entry at 86, stop loss of 14%, which is around 74 levels. 74 is just around that zone, and targets of around 40% from here. You can also keep the 120 is around this zone, but you can also expect 190 levels once we cross that level. So from investing, always ride the trend. So that's the second pick for today. Now, before we move forward, if you do like my analysis, don't forget to subscribe to the channel, and you can also buy me a coffee if you learned something from me. This world where a lot of people are charging and making money out of people, I'm sharing free content. So if you do feel to support me, you can buy me a coffee. The link is also in the description. Do check it out, and if you find time, do support me. So let's move forward. The third stock for today is Greaves Cotton Limited. Now, this stock has not done anything for the last many years. I think almost 10 years. The stock has not given any returns. This company has been focused on diesel engines, and the last 10 years, diesel engines have completely gone down. No one is using diesel engines anymore. And this company has also changed its strategy completely. And the reason why the company has not done well is because the company was purely focused on diesel engines in the past. But last couple of years, the company has has a new division which is called Ampere, I think, and they sell electric vehicles, electric scooters or bikes, right? And they have done very well. They have a very good market share of 14%, I think. They're top 3 players in India, and they have done very well. A couple of quarters of they have posted good results in the last few quarters, and also if you see here, the sales has gone up. Now remember, the new segment, which is the Ampere, which sells the electric vehicles, their sales is almost 40% of the entire company's sales. So that's a very good sign, and if they're able to ramp up production, and if the demand is good in the next 3 to 5 years, this company can do well. So it's a kind of a dark horse, you could say, and it's a small cap company around 3,400 crores. PE is 67, so ignore the PE for now because the company has changed its strategy. So the PE is still not very great because the company has been posting losses, right? ROC of 10.4% and here ROE of 6.59%. Sales growth, 3-year sales growth 12%. That's what you have to notice here. That's purely coming from the sales of electric vehicles, and I think that's the game changer for this company. And if it clicks, there's a huge potential here. The profit growth, however, has not been great, primarily because they are still doing a lot of capex in the electric vehicle space and they are spending a lot of money. So it might take a few months before it generates profits, a few quarters before it generates profits. But overall, I think the stock might head higher before even we get good results. Okay, the sales, as I said, has been stagnant, but last year has been very well, and I expect the trajectory to be on the upside, right? Also, the operating margins have hit all-time low of 1%, and that's primarily because of the engine sales not doing well. And I think the electric vehicles will do well going forward. So moving on to the technicals here, this is the weekly chart of Greaves Cotton, and the stock again is in a major support zone. Now, this is my favorite strategy, major support zone. I've done a lot of stocks before, and if you see, the stock has reversed multiple times around the same zone over here, right? We had a breakout, kind of went higher, again up, but the stock has not broken the previous weekly swing low, which means the uptrend is still intact and the stock is consolidating, and we might see a breakout and head higher, right? So it has already broken out here with good volumes. We also had a breakout, not a breakout, but a strong candle here, but eventually we have broken out from a 14-week tight consolidation and we might head higher from here. So you can enter at 149, stop loss of 12.75%, and we're looking for targets of 240, which is the previous all-time high, previous highs over here. Now remember, if the company does very good sales and if it's able to post profits, we can see much higher levels, probably in 500, but you will need patience. So keep that in mind, please. And the stock probably might do well also. So that's the third stock for today. The final stock for today is MCX. Again, a company which has not done well for the last 7 years and which is showing momentum. And also, I think it might get out of this recent fiasco with 63 moons and the softwares still not delivered and all of that. Probably it's time we might have some positive news on that. So I'm not sure about that, but let's look at what the fundamentals say. Again, a mid-cap company around 9,000 crores, PE of 73, ROC of 13.2, ROE of 10.3, profit growth, sales growth of 9%, and profit growth has not grown. Okay, but the charts are saying something completely different. But remember here, the sales had been flat, it went down, but again, the sales has almost come back up to the 2012 levels. So probably we might see an uptrend going forward in the sales. Also remember, the options segment have been doing very well in MCX. I've done some fundamental research as well, and I think that might contribute to bigger revenues and also bigger margins, right? So operating margins also came down. We kind of hit a bottom here, and then we have been going up and up. So overall, again, we've gone down this year, but I think that's primarily because of the costs involved for the software itself. And I think if that is sorted, I think we might probably we might get back to 45% margins again. Again, profitable company, but not growing its profits yet. It has been kind of stagnant, not doing well. But charts are saying something different completely, right? So if you look at the shareholding pattern here, the public shareholding is coming down, which is a very good sign because people like us are selling the stock, and who's accumulating? DIs and FIs have increased stakes. So DIs have increased the stake to 55% now, right? So we've gone from last few years, we've gone from 40% to 55%, and here we've gone from 36 to 24%. Net to net, this has gone to 76%. We've gone from 76, 77% to almost 79, 80% here, right? And that's a very positive sign because DIs and FIs are accumulating. And also, if you look at the quarterly shareholding pattern here, DIs have been increasing for the last few quarters, right? And public has been selling. So that's the shareholding pattern, and that's also one of the reasons why we're looking into this stock today. Now, technicals. If you look at the monthly charts here, this was 2013, and after 10 years, this stock is kind of breaking out, right? We were kind of facing resistance around that zone multiple times. We could not cross that zone, but finally we are crossing that. I hope we don't see a candle like this, expecting that September would be a very good month for MCX. But if we kind of head higher, then we are seeing very good targets here because this is a 10-year consolidation. A 10-year consolidation breakout can give massive returns. Keep that in mind. And looking into the daily charts, we had a nice breakout here. The stock has been going up, and then we had a breakout last Friday as well, this Friday, right? So it's a very good bet right now as an investment bet. 1824, stop loss of 1600, and targets of 3500, which is 92%. Now remember, all these stocks can be also a positional trade, and if you want to swing trade, go to the hourly charts and you can keep a stop loss and you can trade them. So these are the 4 stocks. Let's also look at the stock summary. UnoMinda, large cap, JM Financial, MCX mid cap, and Greaves Cotton is a small cap. So overall, UnoMinda is a very good company. So out of the four, if I have to pick one for investing, it'll be UnoMinda. Definitely, if you want to play the kind of dark horse play, then go for Greaves Cotton, also MCX, right? So overall, these four stocks are looking good. Targets are somewhere around 60%, 40%, and 90%. So overall, I think they might do well. Out of four, even if two does well, then your portfolio might be out. So focus on your winners and try to add on to your winners, and that will move your portfolio overall up. Okay, so that's it for today. I hope you enjoyed my analysis. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye bye.